Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Laws are like sausages. It is better not to see them being made. The fundamental cause of trouble in the world today is that the stupid are cocksure while the intelligent are full of doubt. In theory, there is no difference between theory and practice. In practice, there is. If you want to make God laugh, tell him your plans. God is a comedian playing to an audience that is afraid to laugh.
30-year bond yields are suddenly looking less like safe assets and more like stress indicators, with Bloomberg terminals attached. UK 30-year yields are near 5.7%. The US is at 5%, while even Japan, the spiritual home of ultra-low rates, is pushing towards 3.9%. Markets are quietly asking an uncomfortable question. Who's buying all this government debt without demanding a bigger reward? Inflation fears, giant deficits, and endless borrowing are turning bond investors into very reluctant lenders. And when long-term yields surge together across the developed world, is usually the market's version of clearing its throat before saying, this may get expensive. The S&P 500 just hit another record high, rising 19% since March 30th and adding a casual $11 trillion in market value in less than 7 weeks. Apparently, recession fears lasted about as long as a New Year gym membership. Tech is once again doing the heavy lifting. Nvidia is up 23%, Google again 23%, and Tesla 24%, while investors keep treating AI like it's both a business model and a religion. What's remarkable isn't just the rally, it's the speed. Markets went from hard landing panic to all-time highs faster than economics could update their spreadsheets. Silver is suddenly trading like it found a turbocharger. The gold to silver ratio has collapsed to 54, down nearly 49% from the April 2025 peak, as silver outpaces gold for 6 straight sessions, its longest winning streak in months. In just days, silver jumped 20% to $87 an ounce, while gold managed a far more polite 3% rise. That's a market basically saying safe haven is nice, but leverage is more fun. Historically, when the ratio drops fast, it usually signals investors are moving from fear to speculation, and silver loves that environment. The last time things got truly wild, silver blasted past $120 an ounce earlier this year. India's oil economy is doing what economists politely call complicated and what consumers call why is petrol still expensive. This chart shows the combined impact of oil marketing companies plus government fuel taxes touching 7 to 8 lakh crore annually in recent years. But now crude prices are climbing again and that giant tax machine is starting to wobble. Higher oil prices squeeze everyone at once. Consumers spend more on fuel, companies face higher costs, and governments often cut fuel taxes to avoid public outrage. Translation: the fiscal jackpot starts shrinking fast. This chart quietly explains India's biggest economic challenge. Out of roughly 53 lakh crores in spending, nearly 72% goes towards salaries, pensions, subsidies, and day-to-day operations. Another 26% disappears into interest payments, basically paying for yesterday's borrowing. So what's left for the future? Barely 1.9% for AI, semiconductors, and R&D. In the middle of a global AI arms race, that's like showing up to a Formula 1 race with a scooter. Countries are now competing on chips, automation, and innovation ecosystems, but budgets built around legacy expenses struggle to pivot quickly. The concern isn't spending too much, it's spending too much on the past and too little on the next 20 years. As Peter Drucker said, the greatest danger in times of turbulence is to act with yesterday's logic. India's software exports are still growing, from $73 billion in 2015-16 to $214 billion in 2025-26. But the market is no longer paying premium valuations for old outsourcing models. That's a real problem. If TCS drifts towards a price earnings of 16 or worse, closer to the 2008 crisis low level near 10, investors are basically saying, show me the AI strategy before I pay tech multiples. And this isn't just about stock prices. India's IT sector supports millions of high-paying jobs built on coding, maintenance, and global back-office work. Exactly the areas AI is beginning to automate aggressively. The next 5 years will answer a massive question. Does AI become India IT's biggest productivity boost or its biggest disruption?